Welcome to Wall Street to Bay Street and another edition of Market Updates. This is Sunday, October 23rd, and the market just continues to rise. Right now, if we take a look, Dow Jones, the DIA, and SPY both continue their meteoric rise from early September with very little in the way of pullback. Now, what this coincides with, as you probably all know, is the drop in the U.S. dollar. Take a look at the drop in the U.S. dollar from early June. We're talking about 87 down to 77 cents. And that is a tremendous move for the reserve currency of the world. What we have happening here, we'll see stories about this, every country wants to benefit by exporting to other countries. And you have this massive currency devaluations going on around the world. Everyone's either trying to print money, aka quantitative easing in the U.S. or Japan, who's looking at outright buying securities, bonds, etc., to lowering interest rates. And you have every country in the world trying to maintain a weaker currency. Now, obviously, the greatest beneficiary of this has been gold. Take a look at gold from late July all the way up to about a week and a half ago or a week ago. Gold hit a record nominal high of 1388. Obviously, if you wanted to do the inflation-adjusted high, we're talking somewhere in the $2,200 to $2,400 range. So inflation-adjusted, gold is nowhere near its all-time high. Now, what we do have, though, if we take a look over the last week or so, we've got a pullback in gold occurring, a little bit of a sell-off. So what we are going to do, we have our position in gold as a 6-minute chart here. Let's try to recover, pull back, try to recover, pull back, try to recover, pull back. So we've got an ongoing drop in gold right now. And what we will likely do, we're going to watch for various signs. You can see in the squeeze chart, squeeze anchor here, we have momentum declining. We're also not on an oversold position on the value chart. What we're going to do is monitor this position, see when we finally get a bottoming out in the process and start picking at it. Now, where if we continue to drop significantly, where we would probably pick up some more or significant amount would be a 50% retracement from the low to the high, most recent low to the high. So we'll take this one up here, and once we do that, be too precise because this is a massive move. So we're looking at in the 1270 range. So if gold gets down to 1270, we'll start nibbling for sure. One trade where we put on a pilot position a week and a half ago is the VIX. And as you can see, the VIX just continues to get destroyed as fear is being taken out of the market. Now, let's take a look at this on a weekly chart and see what we're heading. Weekly chart, daily chart, 50 months. So, we're at pretty much 2-year lows in the VIX and dropping every day. Now, what I think is going to happen is we're going to get a pullback in the markets, a significant one, and that could be due to a dollar bounce back, some exogenous shock, but somewhere along the line, some fear will come back into the markets. It's not going to go up all the time. It has to have some sort of pullback. And if it does, it easily pull back into the 20s. Now, the way I would suggest playing this is, since the VIX is so low, the options on these, the calls on these several months out, are very inexpensive. So you can buy, say, a December or January 14 call for just over $1 an option. So one way to hedge yourself if you're taking long positions is get yourself some VIX, because it'll probably move significantly more to the upside than the market will move to the downside. We've had some markets pulling back a bit. You take Brazil, which we use the EWZ. Look at Brazil, we've had somewhat of a pullback here from almost 81 or 81 something down into the 75, 76 range, and we'll continue to monitor that because that could be a canary in the coal mine for our markets. These continue to pull back. Brazil exports a lot of commodities and quote stuff quote to China, and with China raising rates this week, this should give us a little bit of direction as to the near-term movement of the market. One thing that intrigues me are the bonds. And this is the TBT, which is the double inverse of the leaning 20-year treasury. Basically, an inverse of the 20-year treasury bond. And it's looking like we have maybe potentially put in a double bottom, which would correlate to a double top on the treasury bonds, whether it's 10-year or 10-year notes or 30-year bonds. So what we will likely do here, and we'll probably drill down the next week or so, is look at a short time frame to see whether or not we'd like to pick up some of these. Right? The trade of the decade, or the next 2 decades, could be upon us, where you start to short bonds. The interest rates cannot go any lower, and eventually people will want to force the U.S. government to pay up for their interest. Well under 2% for a 10-year note, which is not paid. So we'll look at this further in depth. What we might do is put on a pilot position, or what you could do is write some puts against it, some 32 puts, 31 puts, or even 30 puts, and collect the premium, or collect the shares if it moves against you. But more than likely, collecting the premium. Now, one other area we want to look at is the FXI, China. China has had a nice run over the last month or so. This red bar here is a day that announced it hiking interest rates to try to bring the economy to a slower landing. But what we're going to do is we are going to drill down and try to find some Chinese small caps. Some of the best values in the world are companies in China that are trading at 6 to 8 times earnings, growing 30, 40, 50% annually. And if you can find some of those and ride them out, you can make a lot of money with it. But what you have to be wary of is the accounting and the various potential shenanigans that have befell some of this stuff. But a lot of the medium to larger ones are starting to be covered a lot more by a lot more U.S. analysts, and you can see several of them in the IUD 100 list. So over the next few weeks, we're going to start maybe each Friday posting a Chinese stock just to give you some further things to look at, companies to look at. A lot of them have been IPO'd in the last 6 months, so we will look at doing that and trying to find some more positions to add to the portfolio. Good luck, good trading, and we'll talk to you next time.